Hello from Otet Markets. This is Ahura with short review on US inflation data and market reaction. First of all, let's see what we had in the economic calendar, and then we can check the charts and how the market can react to this data. So far, we didn't have any surprise in the market. Both inflation and core inflation, they increased in line with expectations, both with 0.3% in month on the monthly scale. However, the 0.3% increase of core CPI, it happened for the fourth consecutive month. For the fourth month in a row, we have the inflation increasing by 0.3%. That's not such a good sign. If you look at we look at this, what happened in the like kind of the bigger picture. I mean, in a bigger picture, if you're looking at the bigger picture, say that okay, 0.3% monthly increase in the core inflation. It's not such a good number, and it's not something that we can expect that as a it's like to say that okay, inflation is in line with expectation. No, inflation showing in line with expectation, but it's more sticky than the previous expectations. Still, on the annual scale, the 3.3% also repeated for the fourth consecutive month or the three or fourth consecutive month in a row. So on the headline front, the headline inflation in CPI increased by 0.3% after 2 months of increasing by 0.2%. This time, CPI increased by 0.3%. Yes, it's in line with expectation. This is what Federal Reserve and the market was expecting, but still, it means that inflation is still increasing. And for the first time after several months, I don't remember, 4 or 5 months, inflation started to increasing. So inflation, after falling down to 2.6% this month, increased to 2.7%. Actually, from 2.4%, it's increased to 2.6%, and now it's increasing to 2.7%. So which means that inflation is still sticky. There is still the risk of increasing inflation. So we have to wait and see what will happen in 2025. But with this data that we have, with inflation numbers that we have, we can say that we cannot say that the Federal Reserve will not have a challenging to bring down the inflation further. So what we are going to face in 2025, it's a little bit with the more sticky inflation. But for now, what happened? What market reacted to this? Market now expecting more than almost 98% for 25 basis point rate cut. That was about 85% earlier today before the data published, and now it's more than 88. It's about 88%, which means that actually we can say that there was kind of no doubt that the Federal Reserve will cut the 25 basis points, we cut it the inflation, the rates by 25 basis points. There was kind of no doubt on that. But what could change? The thing is that if you have the possibility, or if you give more chance for holding the current rate, it means that we will have more hawkish tone in the statement. It doesn't mean that we're gonna have the rate, we're gonna have the holding the rate in the December meeting, which is going to be actually the next meeting, the next week on December 17th. That's not something that we are expecting to see. That okay, Federal Reserve to not cutting the rate in December meeting, holding the rate. No, with the more chance for holding the rate, it means that we're going to have a more hawkish tone in the statement, but there is nothing going to change. Market was expecting 25 basis point rate cut, going to expect again the 25 basis point rate cut. There is nothing change. But the thing is that how this kind of the tone of the expectations, how the tone of the statement going to change, one, and second, how many the rate cut we can expect for 2025. We know that in the December meeting we will have 3 months inflation expectations, we will have the dot plot, and we will have the economic growth expectation for 2025. All these numbers that we had right now here, they're going to affect in those details, numbers, and the charts and the dot plots that we're going to have. We will have it in December meeting. That's what was the matter, not the reality of the cutting the 25 basis point rates cut, which was kind of which we didn't have any doubt on that going to happen in December. Actually, for now, we don't have any. Still, we don't have any doubts on cutting the rate by 25 basis points. Let's go and see the chart. How the chart reacted to these numbers. If you look at the charts, here is my chart. If you look at the chart, you can see that the US dollar index in the first reaction slightly fell from 106.75 almost to 106.30. But the thing is that again, it's increasing. It could be more stable around these numbers. Why? As I explained, yes, the data they were in line with expectations, but we should we should expect this reality that the inflation is sticky, with 0.3% core inflation increasing for the fourth month in a row. We cannot say that, okay, it's not such a big deal. We can lower the inflation in the next month. No, if in the past 4 months we couldn't make it, we cannot make it later as well. Or if we can make it, it can be challenging idea or challenging way to go. So inflation is sticky. This is what these data and these numbers telling us. For US dollar index, we expect to see a little bit slower in US dollar, but it doesn't mean that we can expect the US dollar to fall. No, 105.20, 106 is somewhere that we're expecting to see the US dollar index. Still, US dollar index is 105. Like that's still, even if it falls to the 105, that means that still the US dollar is very strong. Generally, it's strong. It's not 98. It's not 100. It's not 101 mark. It's 105, 106 mark. So US dollar index with these numbers cannot fall down. The US dollar index with these numbers can still hold itself about 105 mark, which is still means that the very strong dollar. On the gold front, with a little bit slower inflation, which means that okay, it's gonna be with the yields also can lower slightly, or US dollar also can fall slightly. That's positive news for the gold. So which means that gold can hold the price above 2,700 US dollar. We were expecting to see the 2,700 US dollar actually in the last month, in the last week of the month, but but the gold reached to this level much higher, much faster than we were expecting. So US dollar for gold, we are expecting to see the gold to continue its slight uptrend and above 2,700 for year end. As for the stock market reaction, the stock market, US dollar, SP 500. It's normal to see the positive reaction in the stock market as we're expecting more dovish policies and more rates cut this year. With so many other good news that we had in the stock markets, with the Mr. Trump administration's news and the new cabinet, the new administrations that are going to come to Mr. Trump's actually the new candidates that are going to come to the Mr. Trump's administration. So all these numbers and the new government, new idea, all this positive news with the rally, with the Santa rally, with this rate cut, all of them, it means that the positive news for the stock market. So as it happened in more than 80% of December's, we can expect slightly positive reaction in the stock market, but it doesn't mean that such a big jump. But for the stock market, we are positive about that. We can expect to see the week close to close at the same level of the opening, or slightly even slightly above the open price, around 6,090 or 6,100. So this is what's happening in the stock market. Same thing we can expect for NASDAQ or Dow Jones. So generally, we are positive about the stock market. So these numbers are positive for the stock markets, even they are positive for the Bitcoin. These numbers are positive for the stock markets and Bitcoin. They're negative, slightly negative for US dollar, but not much. As I told, these numbers still means that inflation is sticky. And for gold, generally with the other data keeping in mind with these numbers and data we had for gold also, that's the positive numbers and positive data, and we can expect the higher numbers for the gold by year end. That was the data and market reaction. Hope it was useful for you. If you had any other question, do not hesitate to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.